Hello and welcome to traders and investors. I'm glad to present you the daily market review prepared by analysts and experts from fx.cu portal. Here we go. Today is August 24 and we started from euro-dollar pair with Jakub Novak as usual. But first, let's have a look on 5-minute chart for analyzing yesterday's transactions. Further decline became limited as the first test of 1.0806 coincided with a sharp drop of the MACD line from zero. The second test, meanwhile, happened when the MACD line left the oversold area, prompting a buy signal that led to a price increase of over 40 pips. Poor business activity data in the Eurozone service sector caused a massive sell-off in euro-dollar pair. However, a similar weak report from the US offset the losses, returning the balance in the market. This will likely be observed until tomorrow's speech by Fed Chairman Jerome Powell at the symposium in the Jackson Hole. Euro bulls may also attempt to break out of the sideways channel due to the empty macroeconomic calendar. Long positions buy euro when the quote hits 1.0878 and take profit at the price of 1.0909. Growth may occur in continuation of yesterday's bullish movement. However, when buying, make sure that the MACD line is above zero or is starting to rise from it. Euro can also be bought after two consecutive price tests of 1.0847, but the MACD line should be in an oversold area, as only by that will the market reverse to 1.0878 and 1.0909. For short positions, sell euro when the quote hits 1.0847 and take profit at the price of 1.0814. Pressure will increase in the event of a failed attempt to break out of the daily high. However, when selling, make sure that the MACD line is below zero or is starting to drop down from it. Euro can also be sold after two consecutive price tests of 1.0878, but the MACD line should be in an overbought area this time, as only by that will the market reverse to 1.0847 and 1.0814. The next stage of our review is the next major. The pivot points draw is made by Evangelos Paulakis. For the third time, when testing the support zone of 1.2629 and 1.2597, a considerably long lower shadow is formed on the daily candle, and the pair returns to consolidation zone, consequently passing the weekly 1.2629 and monthly 1.2597 supports remain significant for new bearish prospects in the area. The current attraction is exerted by the 1.2707 and 1.2724 area, daily short-term trend, plus lower boundary of the daily cloud, serving as the center of attraction of prevailing consolidation zone. To exit this zone, the bulls need to move beyond the daily cloud. Currently, its upper boundary 1.2899 is reinforced by the resistance levels of the weekly and monthly timeframes 1.2865 and 1.2893. Intermediate resistance on this path can be provided by the levels of the daily Ichimoku cross 1.2759, 1.2804 and 1.2849. After testing the final pivot point yesterday, the pair has returned to the key thresholds and is now operating within their area of attraction. Key levels today converge around 1.2700, central pivot point, and 1.2734, weekly long-term trend. Another rebound and a new phase of decline will allow bears to once again consider testing the significant support zone of the higher timeframes, 1.2629 and 1.2597. Meanwhile, support for lower timeframes today are at 1.2636, 1.2551 and 1.2487 classic pivot points. Consolidation above 1.2700 and 1.2734 and a reversal of the moving average will lay the groundwork for strengthening bullish sentiment and advantages, with intraday targets at 1.2785, 1.2849 and 1.2934. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Petar Yakimovic. Gold has been trading upside this morning, but we found the test and reject of important resistance at 1923, which is a good sign for the further downside rotation. Due to the market extended condition in the last 2 days and test reject of important resistance cluster, Petar sees potential for the further downside movement towards lower reference. Downside objective is set at the price of 1914 and 1910. Stochastic oscillator is showing fresh downside cross and overbought condition, which is another good sign for the further downside movement. Key resistance is set at the price of 1923. And finally, here's Lowry Bailey with USDJPY pair focused. Let's have a look. Yesterday, the USDJPY pair covered the entire range of target levels 145.90 and 144.73. This morning, it rebounded higher from the MACD line, blue line on graphic. It's possible that the bearish correction has ended, and now once the price overcomes the nearest resistance of 145.90, it will move towards the range of 148.00. On the 4-hour chart, the price is below both indicator lines, MACD line and a red balance line on graphic. Marlin oscillator is turning upwards, but is still in the negative territory. There are no clear signals for a reversal or the end of the correction. If the price consolidates below 144.73, the correction could dip into 142.82. An uptrend will commence once the price consolidates above 145.90. Slightly above that is the resistance of the MACD line, 146.30. That's all for today. See you online soon. Good luck.